Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, the buy recommendations are gold and crude oil. And the bottom line here is that I'm looking for one more pop in crude oil, and then I'll be selling some because we will get some sort of correction in this up move. And then on gold, I'm buying. Like today, it's down. I'm buying gold. Um, If I get a pop in oil, I'll be selling oil, and I'll show you why. Let's get into it. This is crude. Again, 9 out of 10 investors want to buy it up here at the top. Down here where I initiated with a buy rating, we were down to 10% bulls. So um, we've now had a nice move up from, let's call it 70 to 80. And the bigger picture here again is that we're going into a third of a third wave, and I'll attach my longer YouTube on crude oil for those that want more background and more detail, and I suggest watching it. But we're going into a third of a third wave, and within that big third wave, where third waves are the most powerful and most profitable, we'll have a five-wave advance. And we got our first wave here, our second wave here, and we're entering our third of a third wave. So I definitely look for these. So within the third wave, right now we'll have five waves in the third of the third. So we're getting close to a top in the first wave up of the third wave. So I expect to pop one more pop higher. Maybe it'll draw all of our moving averages together and give us a bullish rainbow convergence. And from there, I will be selling and looking for a pullback. The pullback could be down to, hopefully, down to this convergence at 82 or so. And if it holds, it promises a new higher high, and that'd get us back into our small third of a bigger third wave. So that's kind of what I'm looking for there. Here's gold. So again, this looks a lot like oil. Up to almost 10 out of 10 investors wanted to buy gold back at the beginning of last year, of this year, and then it got down to 10% bulls. So we put in a nice bullish hammer here, where prices opened the week at the top of that range. Intra-week tried to sell off, and by the end of the week was back close to the highs. This isn't the greatest hammer, but it is a hammer, and so we went to a buy rating. So far, it's held our low, and we have just about the opposite of what we're seeing in crude oil. So this is GLD, the ETF. One more thing on crude oil. I use USO. That's the ETF. We get a pop up. If I have 100 shares of USO, I'm going to sell 20 20 shares, something like that, maybe 25 at the most, but it'll be a good size portion because second wave retracements can be deep. Okay, so now back on gold, where all these moving averages are coming together. This is uh, the opposite of what we're seeing in crude oil, where crude oil was up above this cluster of moving averages that were coming together. That's called a bullish rainbow convergence. And usually we get a retracement back to that convergence, and then we see if it can hold or not. But that's where I would buy my shares back. On gold, we got the opposite, where prices are below that confluence of moving averages that are just about ready to touch probably at weekend. And that would suggest then either we get a retracement up to this convergence, or prices will sit here a little bit longer. But I think with the bearish sentiment out there, which is a contrarian indicator, if 1 out of 10 investors want to buy gold, that's a good omen for a market technician. Um, so that's kind of where we're at gold, and I'll attach my video on that. Um, Okay. And then on seasonality, again, seasonality turned bullish at the beginning of July. So we got seasonality at our backs. And again, seasonality is just a tendency, but you like when it's in your favor. So thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors. Adios.